Okay, amazing day, amazing day, amazing day. So let's get into this session. As mentioned, all right, is I'm going to show you how we're going to combine two strategies to give you a foolproof way of being able to trade these markets upon London and New York Open. Okay, now what we're going to do is this. We understand our core fundamentals, market structure and price action strategy, which allows us to understand how the markets like to move, and when they break structure, how we can get a confluence of getting in the markets. Have a look at this market here. We're going to zoom out. When we zoom out of this market, let me hit reset. We can see that GBP USD has been a bearish market. I put some dots on the screen to show you how the market's been moving. All right. This is a higher high, higher low, higher high, higher low, higher high, higher low, higher high, and we're expecting a. Sorry, what am I talking about? This is a high, a lower low, a low high, a lower low, lower high, lower low, lower high. Sorry, I was having syndrome, yeah. So we're expecting to see a lower low. All right. These dots are in here, doing the same thing as if it was to draw a path. Now look at where we were in the market. Okay. This Asian session was, at a higher point in the market. All right. It was a high point in the market. Now, let me tell you what could happen here. What could have happened here is the market first grabbed this liquidity up here and then pushed down. But on market open, which is this yellow box, if I drop down to my smaller time frame, on markets open, we saw that the market was near the bottom. All right, so here is our Asian session range, this red block. Market open, we saw the markets down here around this bottom. Now what that could be is the market wants to take liquidity from here, have a look at the path, take liquidity from here, then get liquidity from there, and then go. But instead of you guessing and thinking to yourself, marrying that's what's going to happen, what we can do is we can come to a conclusion and say, we're going to have a sacrificial lamb. And that sacrificial lamb is not based upon us just wishing and hoping for the best. It's based upon us seeing this market, have a look, break the structure below our Asian session, okay, which is going to be that red line. Break the structure, you see, broke the structure in here. Yeah, whichever one you want to take, even if you took this one or this one, let's just take this one for now. Broke that structure, indicated, corrected without breaking the previous structure, and then continued and closed here. You're going to take this trade, even though there is a possibility based upon what we've just said that markets are opening, and what this market wants to do is make a manipulation break of structure W, like this. So why are we saying that? We're saying that we don't want to miss out on this trade, and we've seen the market. We want to be in for the sell. The market's broken structure bearishly with an indication, a correction, and a continuation. But in hindsight, if I use this, in hindsight is a beautiful thing. But at the time, we could have been thinking that this market's going to come and make a manipulation W. Yeah? Pushing up over this kind of area in here. Yeah? Causing some sort of displacement in here and giving us that bullish entry that's probably going to come up here through this session. Oops. It's going to come up here through this session, sweep the liquidity up here, and maybe we start seeing this journey happening. But what you're going to do is you're first going to trade indication, correction, continuation. And if you see the market it doesn't indicate, it corrects and continues, but then displaces in the opposite direction, then you're going to understand that you're waiting for that retracement back into that imbalance for the buy. In this instance, the market indicated, corrected, and continued based upon our core fundamental unity strategy. And what we saw the market do is run towards further liquidity. The liquidity we saw that market run towards is running towards the low of New York, yeah, and breaking many structures. Have a look at it. All right, let me get rid of some of this stuff. Now, this would have been a tremendous trade to start the morning. Have a look. Wow. All right. The market traded and it went to hell towards the liquidity. Now, when we start getting into these levels of liquidity here, and we saw this market break this liquidity level, well, look, for a start, let's look at what this trade would have meant to us, just based upon indication, correction, and continuation. Even placing our stop. We were saying that this would have been an entry. Stop would have been above the last high. We know this trade at the moment is a 1 to 13 trade. It's a tremendous trade. Okay, and still going. All right, have a look. It's a huge trade. Now, there's factors that are happening in the market. There's lots of GBP news today, lots of EU news today. But what I'm saying is this: we fundamentally don't know what the markets are going to go and do. All right, we have to go by what we see, and we have to position ourselves in our trading journey so that we can take advantage, maximize the chances of taking a profitable trade, okay, without missing, moves like this. Because moves like this is what changes our whole month's worth of trading, okay? So what we're saying is this. So let's have a look at it in other scenarios. Let's back test what I've just said, okay? Let's back test what I've just said. I'm looking for an example. Okay, so let's look here, for example. Okay, this is a good one because it's not typical. It's not like exactly what we're saying. All right. So we can see in this market here, we're watching it. London opens. We see an indication below this level. All right. We're waiting. Our first step in our strategy was we're trading indication, correction, continuation. So what are we waiting for? We're waiting for indication. We're waiting for correction without breaking the previous structure, and continuation. If that happens, we are in for the sell, especially if we believe the market is bearish and there's a possibility that this market can continue pushing down low. All right. We have to also still know we will start with the market structure. All right. However, what does this market do? This market, it pushes down here, makes a potential indication, which because of this push out with strength and speed, that breaks previous structure. So we've got a manipulation W that breaks previous structure. Then we understand what we're going to do next. What are we going to do next? We're going to wait for price to return with special interest in the area where it broke structure. Let me remove this. Can you see what I'm speaking about? The special interest is where it broke structure, and we see imbalance in that area. You see, it broke. This is the structure. This is a special interest we take. It's just swept liquidity. We wait for price to return. This is our entry. It's the imbalance. And the safest place for us to place our stop would be below this low. Aggressive place to place our stop is taking into consideration just the imbalances that we can see that exist in this leg out. Now let me explain something to you. There is an imbalance there, yes, but there is also an imbalance here. It's in here. Yeah, so there is an imbalance here that I've covered, but there is also one here. And if you really wanted to go there, if you have the confluence, if you look at other candles, there's also a little area here which I don't love to see when candles do this. Yeah, so maybe a more aggressive entry could have been like this. Either way, that is 1.6 pips, and the other one is if you can tell me, is 4 pips. All right, so what did I just say? What's different to what I just said? What I've said is this: so that we can have total coverage of a move, what we want to do is first and foremost, wrong one. Let me anchor the text. Where's my anchor text? I keep moving around this favorites panel. It never saves for some reason. All right, let's go. First, we want to trade ICC. Yeah. So what am I talking? In fact, let me correct that. 1. London Open. Help me. Here we go. Help me. All right. London. Well, we look. It's our same process, our quick guide. But I'm just trying to quickly draw it out. Overall market direction. And then we want to make sure, kill zone times, identify liquidity, identify premium or discount. But here's where we get funky, yeah? In fact, I'm going to even markedly have it in a different color. Okay. Is that then I want you guys to do this. I want you to trade ICC. Yeah, for those of you who don't know what ICC is, you're confused. Shouldn't be. Oh, come on, drop me out, please. That's because I got this on. What is this? What is this going on now? Microsoft Speech. Get out of it. All right. So, oh my God. I want you to trade ICC, indication, correction, and continuation. All right. Now this could potentially be a sacrificial lamb. It can be a sacrificial lamb because, why doesn't this thing just work? What's happening here? Here you go. It can be a sacrificial lamb because that indication, correction, continuation, this, see, we've seen it here. Well, we haven't seen it here because there didn't indicate, so it corrected here, indicated correct, it didn't continue. So you're not in for a sell. This one grabbed liquidity and then straight away did its thing. All right. But, sometimes we might see this market down here, and then we see that leg and it looks as though it's indicated, corrected, and continued. But then we see that leg out creating that manipulation W. Here, it's not the case because when this pushed down here, it grabbed liquidity straight away, which is the first ding-a-ling-a-ling-a-ling-a-ling-a-ling. Liquidity has been taken. And then it pushed out straight away, it legged out straight away, which is great. Amazing entry, amazing trade. It's beautiful looking trade. Yeah, have a look. This trade went. Yeah, this trade absolutely went. Okay. But you trade ICC first, all right? If continuation, stops and huge displacement leg appears, then you trade manipulation pattern for entry in opposite direction. Okay, this is a short-term strategy, because obviously, higher time frame strategy is you're trading with the trend, trading with the bigger trend. If you was looking at this on a 15-minute time frame or whatever it may be, you're going to be trading this, in direction of trend. But what I'm showing you is when markets open, there is a amazing opportunity for you to be able to get involved with that liquidity that's injected into the markets at that time. All right, it's an amazing opportunity for you to do so. Okay, say for example, I'm going to move this to a black screen and you can take a screenshot. All right, I'm going to also take a screenshot. How about that? All right, I'm going to take a screenshot also, which looks like just doing that. Okay, and I'll drop it somewhere. Okay, now, for example, let's now get rid of this. All right, and if we go and reset these charts, we have seen, and I put some lovely dots in here as well. Okay, let's do that. And let's reset these charts. The dots that I put in this chart, let me get rid of this as well. We don't need this at the moment. And get rid of some of my scribbles. This is us showing that example. So that's what's messing up our charts. Let's get rid of all of this mess. All right. So the dots that I've shown in these charts here, if I zoom out, are showing the overall market structure, those white dots. Yeah. If you cross your eyes, you can see that it's like they connect. You can see the lines in between. So our market is bearish. Reason for this little statement over here. Okay, so when we're coming up towards this white dot, I'm not expecting this white dot to be broken. Yeah, I'm not expecting it to be broken or a solid candle breaking. Okay, now what may occur is, we may see a grab of liquidity. Okay, we may see a grab of liquidity, but I'm not expecting for the market to break that level. So when we're looking at this over here, sorry guys, I'm trying to multitask, doing it badly. All right, let's get rid of this. Let's get rid of this. All right, let's get rid of this. So we would have woken up this morning ready to trade the markets as we do every morning London session, and we would have seen that the Asian session range was here, sitting within a bigger New York range. Previous New York PM range was from here to here. Obviously, we knew that last night we had Fed speech, all right, created this big range, all right, can you see? From the Fed speech was about 7 o'clock, 7:30, look, boom, we've seen it push up here, all right, within an hour. But then the Asian session kind of just jammed within that level, okay? So when we're looking at what trade we can take, we are looking to see what happens in regards to breaking this Asian session range. In this instance, whether we're trading on a 5-minute time frame or smaller, we send an indication here, grab some liquidity. But is this enough of a liquidity, draw and liquidity below this level? Or is there more of a draw and liquidity from down here past these levels? Well, I think there's a bigger draw down here from where we saw strength and speed. So that indication, correction, continuation, I'm going to execute that. Why am I going to execute that? Because if I pull up my homeboy over here, yeah, because I'm going to trade this ICC first. And if for argument's sake, this here becomes part of the liquidity grab, because we've seen this wick here, and we see a leg push out like this. All right, so we can make that any smaller. That's so fat. Let's try and change that. Let's try and get rid of that. Okay, let's just make it a line that we see that leg push out like this. Yeah, a big old green leg candle. Then we understand that this is a nam, grab the liquidity, and then we're waiting for price to return into that imbalance for the market to go and get the other liquidity. Yeah, I'm showing a way that you can cover both eventualities. Because in this instance, if you was waiting for this leg out for the buy, you would have missed this market doing and going to heal. Yeah? Not only took out that liquidity there, but prior to the news, evidently this market wanted to push bearishly and go and grab further liquidity. Grabbed it over here. And if we wanted to zoom out, let's have a look to see if we can get more data points. You know, we're all the way down into these levels here. All right, we're down into a little bit of structure over here, previous battlefield, and we can start drawing some other little lines of, you know, potential liquidity. Yeah, below some of these levels. Okay, but the market had a huge run for GU. This is a huge push. Yeah, this here from here to here is practically done. It's, you know, it's done a lot of work. Like, it typically only moves about 30-40 pips. We've got about 70 at the moment. So it's done a lot of things today. It might be exhausted. We might not even see it do any too much for the rest of the day. Okay? And you would have caught that trade pushing all the way down into these levels. Yeah, you would have caught that trade. Okay? Just go and, like I said, you just go and test it on our US 30, for example. Should we? Yeah, let's test it on US 30, for example. Like I said to you, this isn't one that I've made earlier. It's just me looking at the market, seeing what's going on. Yeah. So have a look at US 30. We're going to zoom out. I've got some previous lines and stuff on the screen. Have a look at the range that I've drawn. All right. With a few things that's on our screen right now that I'm going to tell you about. First of all, we can see our white dots. All right, our white dots are letting our eye know what's going on with this market. Higher highs, higher lows, higher highs, higher lows. There's other little smaller higher highs and higher lows, but I've identified, you know, this point here. Market is ultimately bullish. Okay, in this smaller range, we've seen some higher highs and higher lows. For us to make some more little white dots, you know, we can see these things happening. Yeah, you can see a little bit of consolidation as this white dot is within the last high, coming back down in here. Then we can see a little push up in here. You can see a push down in here. Yeah, but we can ultimately see this market kind of making its way in this direction. Okay, now the market's coming back down into a discount, which is that yellow line. All right, let me get rid of this. Into a discounted area, which is that yellow dotted line. All right, but by that discounted area, we can see this area of liquidity identified by that red line. Okay, now the question is, does this market want to continue pushing down further? Because it's allowed to get all the way down to here. Yeah, and once it doesn't break here, it's still a bullish market. You can see here the markets came all the way down to here. But once it didn't break that previous, you know, key structure, yeah, it's still bullish. This market could decide it wants to come down here. Don't get twisted. This market comes down here. This is a big distance. Yeah? If that market decides to push from where it is right now all the way down to even down here, it's 100 plus pips. That would stop you out more than likely. More than likely you don't have a 100 plus pip stop, but maybe you do. Who knows? All right? All right. So let's have a look at, let's drop our time frame down. And have a look at this Asian session. We wake up in the morning. It's 6 in the morning. In fact, yeah, we can look at it right now. That's no problem. On the 5-minute time frame, we're waiting to see an indication, correction, continuation. It's quite big on the 5-minute time frame. We only get to over here for that candle closes, but let's look at it on a 1-minute time frame, all right? Because we're talking about that initial energy to be able to capture what's happening, all right? So we can see here that this was an area of liquidity, and we can actually see a break of structure W here that has a little reaction, but it's not our key break of structure pattern that we look for. Have a look. This W here looks like this. And ultimately, we want to see a W that looks like this. There is a difference. There is a difference. They are different. What is the difference? Because someone's looking at it and can't see it. It's this shoulder. Yeah, it's that shoulder not being a manipulation W. So though we've seen a pattern after liquidity has been swept here, boom. If I saw this pattern, I'd be a bit more hesitant to get into this trade until I see it breaking previous structure, indicating, correcting, and continue. Then it's different. Then I'll change my plans. But prior to that, I'm like, yeah, I'm not sure. This could be to try and trick us out. All right. So therefore, when that liquidity is taken here, boom, 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 I'm ultimately, waiting for that market to retrace and looking for a closure below here in this instance. All right. And I'm turning around and saying, okay, cool. I'm going to take an indication, correction, continuation trade like so. Now in this instance, where, you're not massively in profits. Yeah. But you are at a 1 to, let's just say 2. Let's go and back test it some more because that wasn't that was an underwhelming example because of where price is at the moment. Let's back test it. I'm gonna go a couple candles back, which is on a daily time frame, and then I'm gonna drop my time frame all the way down to 5 minutes. Yeah, reset my chart so I can see what's going on, and we're gonna try and get to our Asian session. Let me go back some more days, all right? Because I don't want to end up back where I started. Okay, let's go back some more days. All right, so let's go here and then let's drop our time frame all the way down so no one can say that we're just, cherry picking stuff. And let's get to Asian session, all right? Hit play, let's get to Asian session. Asian session is here, can you see? All right, cool. Asian session is here. Now let's go and zoom out. Let's understand what's going on with this market. What's going on with this market is evidently bullish. Yeah, evidently bullish over here. You can see something going on like this. If we go and pull out our lines, as we understand how to draw our lines, looking something like this. Actually, I've drawn it badly. Let me try and connect some dots, yeah, like so. Trying to connect some data points, let them touch, and put this over here, let them touch. And then obviously you can see how the market has definitely, accelerated into this energy here. If I drop my time frame down to my, 1 hour, for argument's sake, we can be able to draw that line a bit better. See how badly it's drawn on a bigger time frame because you can't get the, trading view doesn't let you get it accurate enough. Let me make this a little green line, like so. And then we can go again, like so. That this market is bullish, but pushed up all the way to, a premium of the higher range, okay? Premium of the higher range. Remember, this is not a line, it's an area. When we draw trend lines, they're not lines, they're areas. They could just as easily be rectangles, okay? So we've seen this market still pushing up, even though we've seen these candles getting very tight. And typically when we see candles getting very tight, it indicates that it's winding up to do something. So all of these things still come into play. Our understanding of the market still come into play. So let's have a look. Asian session starts. And I'm going to drop all the way down to a smaller time frame. This is our 5 minute, okay? And we can even drop down to our 1 minute. But let's just play things forward a little bit and get to London session opening up. All right, it's Asian session. This is more Asian session. More Asian session. More Asian session. Then we got Frankfurt opening at 6. Okay, more Asian session. All right. London has just started. So as we can see here, all right, we've drawn some lines in here also. So you've got that green line that we drew in a trend. So it's two scenarios. If I drop down to my 1 minute time frame, I'm seeing London start. We've just swept the liquidity. We've just taken some liquidity below that Asian session range. I'm ultimately looking for what I look for, which is going to be a manipulation W. Yeah, a manipulation W or indication correct without breaking the previous high, correction continuation. All right, let's play this forward, see what happens. Yeah, so we've come here, we've taken some liquidity. Can I see a nice clean break of structure manipulation W in here? I can't lie to you, I cannot. Yeah, someone might be forcing it so they can see something in here. Yeah, I can't see no. I'm looking for that big leg out with displacement, and I can't really see it. Not on a 1 minute time frame. So I'm not going to pretend like, oh yeah, man would have got in here. Man, let's keep hitting play. All right. Well, we've come all the way here. This candle hasn't really closed above here. Just about nonsense. I don't know. All right. But we're still in here. I don't know what to do at this stage because I didn't see what I wanted to see below this level. Below this level here, I didn't see a lovely breaker structure manipulation W. And the market hasn't indicated, corrected, and continued below over here for me to say, yeah, I'm taking sales down in this direction. Let's keep seeing what's happening. What happens? Wicking up here. Once again, you know, I can't really see what it is I'm looking for. You see me flick it to the line chart because sometimes it helps to be able to see that manipulation pattern. Now remember where we are in the markets. Look at this little green line here. Let's zoom out. I'm going to emphasize this green line, making it a little bit larger. But let's zoom out and have a little look, remind ourselves where we are. But where we are is that JJ drew a green line in here identifying, you know, potential structure based upon here and this green line here. So kind of that we are kind of in a discount. However, the bigger Russian doll is that we're deep into a premium. And as I can see, this is kind of stalling out now. Where it was coming all the way up here, this is the top of the range. Have a look. It's kind of stalling out a little bit here. We're not, but we might just tap in here and push up here. Who knows? All right. We might just tap in here and push up in here. It's not impossible. This market doesn't tap in here, but so we're watching it. All right. Let's go back to our smaller time frame. We're watching it. All right. Now we're in our kill zone session area where we're interested in taking a trade. But at the moment, have a look. This market has been coming down here. Oops. The market's been coming down here like so. Okay, let me make it white. London started, we're in our kill zone area. The market's just teetering around, but it's kind of not doing too much, you know, because if we were to draw some dots in here, remember this is the 1 minute time frame, small, but if I was to draw some dots in here showing structure, we can see possibly this kind of scenario happening. Yeah, possibly that kind of scenario that's happening. So at the moment we're trading within this point here and this point here, and I'm on a 1 minute time frame. I'm not big, so I don't get confused like, oh, this is a big. No, we're in a 1 minute structure. All right. Now we can see a little high over here that haven't really been violated too bad. Yeah, there'll be little wicks happening, etc. So we're watching it. Let's continue to watch it. Let's continue to watch it. Because here we haven't got neither our indication, correction, continuation or our manipulation W to say we're getting into something. There is a really ugly scenario here that on a smaller time frame, I suppose there is some little manipulation W, but it's not compelling and I'm not going to take it into consideration. It might have allowed you to get up to here, but who cares? That distance from here to here is, you know, it's 20 pips, all right? So we're watching it. Maybe today there's going to be no trade that we can actually take. Let's see. I'm hitting play. I'm watching this market London session. You see all of this here, all of this wicking just above this level and then coming back. It's showing me it doesn't want to break this area. Look how much wicks we got going on, wicks we got going on, wicks we got going on. Just wicks got going on. Where's the solid candle close? Where's the solid candle closure anywhere here? Can't see it. Yeah. So even if you wanted to go there from this level over here, which we broke this structure, indication all the way here, wherever we want to see a closure. All right. Maybe somewhere here, indication. Well, this is actually still like here is an indication because it closed here, but it still was running down. All of this energy here is correction. And ultimately, this candle, if it closes here, could be our continuation and our potential sacrificial lamb. Okay? Could be the effect the market's broken prices, broken out of structure, indicated, corrected, and continued. It's our sacrificial lamb because, have a look. Maybe, can you see? It's not great. I was going to say that this could possibly be that manipulation that we've been waiting for. And if we see a big leg out like this, then I'm going to take the L here and be looking to get in when the price returns, taps into this area, and then pushes up here. So at the moment, I've taken this trade now for the sell because I don't want to miss out on the move. Yeah. If this candle closes here, which I think it probably will, okay, where am I going to be targeting is I'm going to be looking over here, easily get to make it easier for your eye, opening up the time frames so we can see some good levels of structure. Now here's a few levels of structure. Previous battleground is a level of structure which we're actually at now, so that's fine, that's great. Here is level of structure, and obviously, here and the previous New York evening session lows. Yeah. Alternatively, if I see a big leg out causing displacement, I'm going to change this whole little energy here, and I'm going to turn around and say I'm interested in getting in when the price returns back to wherever the displacement is, on the basis that I'm taking this trade up to structure and beyond if there's further information. So let's see what happens. Let's see, have we covered ourselves? All right. And like I said, this is definitely not what I made earlier. This is me turning around and watching this right now and saying how we can trade this strategy. Okay. Let's see. I'm going to hit play. That looks okay for me. Because at the point when we get to here, have a look. Actually, tell a lie, we haven't even got down to that 1 to 3 level yet. We haven't. We're at 1 to 2. Okay. But at the point when it gets to 1 to 3, if it does, which is about here for me, all right, I'm going to make this risk-free and take off 50%. All right. Either way, we've seen that the market price has broken outside of this range. This was the green range that I drew. What green range? This trend that this market was pushing up in. But even though it was pushing up in here, it was slamming its head right into the bigger Russian doll, which is this top of this bullish range. Now, can it keep going up here? Of course it could. And then we'd have to change the angle of that bullish range. But for now, based upon the information we have, we're hitting our head on the top of this bullish range. So when I start seeing it break outside of this little green range, this little push, I'm interested. I'm thinking, my next area of the range is this little green line over here, which I connected some dots with. Have a look of this previous angle. Yeah. And then ultimately, is this market going to start coming down here, breaking further structures? The question I'm asking myself. All right. Let's go back and go to our smaller time frame. See if we get down to our 1 to 3, where I can take off 50% partials and make my trade completely risk-free. Let's see. At the moment now, I can get rid of that. Didn't leg out. Didn't want to push up anymore out of our Asian session. Grab the liquidity below here and wants to go and grab some further liquidity down here, which it's just about gonna do. Or just about close to doing. All right. Lovely. Taking that liquidity. Now, I know that once liquidity's been taken, there's a potential of doing what? What's their potential of doing once liquidity's been taken? So even though I had this target, this fixed target of getting to a 1 to 3, I'm definitely going to be, if I think to myself, I don't want to sit in this retracement, I could have definitely taken some profits here, because I understand that when markets take liquidity, they have a tendency to run in the opposite direction. However, what I would say is this: for this example, I'm going to leave this 1 to 3 here, because I'm not expecting, it's not the most fabulous of entries, but I'm not expecting price to come all the way back and break this structure. I'm not. Can do, because we know there's liquidity above these levels and this Asian highs liquidity hasn't been taken. So it can do. All right. So maybe what I'd do in this scenario is, maybe I'll just make it risk-free. Depending on where I am on my journey, am I profitable in my prop firm account? Am I negative? Maybe I've just done that, made it risk-free, because I'm still in good profits. I'm still getting all the way down to a 1 to 2 point something. I'm just not quite at my free yet. All right. But the issue is I've gone and I've tapped into some liquidity. So this is either going to come and kick all the way back up into here, into this previous structure. Yeah. This previous structure over here is where there was previously some support as the market tapped in here. Boom, boom, boom. All right. So let's see. It might come up here and stop me out for nothing if I've moved my stop. But I tell you what, I'm going to not move my stop. So this little line here, forget about that. All right. We're going to take the L. If we take the L, even though we went into great profits of 1 to 2 point, whatever it may be. But this market, we might see it kick all the way back up into these levels here. But ultimately, I want to see it to keep on going to capture, to make a lower low in this instance. Let's see what happens. Yeah, let's see what happens. And remember, this isn't one we made earlier. This is us looking at the markets in, back testing and being able to understand and see what we can. And this should help you when you're doing your own trading to be able to back test. Now, for me personally, I'm going to let you know for free. I don't really want to see the markets just doing the hokey cokey here. I'm at 1 to 2.7 or something like that first thing in the morning. I don't want to see it do a hokey cokey in here. However, let's go back to those dots. Where's those dots? I'll put the dots on the bigger time frame. You could do it here also. Okay, the dots on this time frame here. This is on the 15-minute time frame. Is just showing you the bigger market structure. Okay, so realistically, this market could come all the way down here and still be bullish on the bigger picture because it hasn't broken the structure. All right, so let's see. I'm going to play it forwards, and I've given a bulletproof way. Not say bulletproof, an ironclad way of how we could try to make sure we never miss out on our moves. All right, make sure we never miss out on our moves. We've seen it in the GU. Oh, lovely. We've pushed down here. Lovely. All right. So now I'm at this 1 to 3. I'm definitely taking 50% off, which is a 1.5%, making it risk free, and the rest of it's gravy. Now I can go disco and just leave my trade to do what it needs to do. Yeah. Now I'm looking at, okay, we're making some progress. We're pushing down here. Are we going to get into previous points of interest? What are points of interest? POIs. These points of interest can be the following: imbalances, key market structure, yeah, previous battlefields. Look at the previous battlefield, which if you ever see me put in a gray line like this, it's a previous battlefield. Why was this a previous battlefield? Why? Because the market came up here and was fighting. Oh, look, we're battling. We're fighting the war of Jamaica versus whoever it is. Man, I got slingshots and all sorts, all right? And then we came down here, we broke that previous battlefield. And just to confirm it was a battlefield, we came back here and checked on our friends on the battlefield before leaving. This is going to have a name. This is going to be called the Great Battle of Kingston over here. Yeah, this area was a previous battlefield. So that becomes a point of interest. So does previous market structure, i.e. swing lows, or lows, swing lows, because on a smaller time frame, this is a swing lows, and swing highs. So does imbalances. These are all points of interest for us as traders. Okay, so I'm now in this trade completely risk-free, taking 1.5% off the table and seeing whether we're going to get down to points of interest. Am I making sense? Let me get rid of some other stuff, because I'm giving you guys a real walkthrough. This session is recorded and it is giving you a prey. I've shown you on the GU that trade's currently run for 1 to 17 and it's still going. Yeah, it's still going. Okay. Let's hit the play button and see how far this trade is going to go. Oof. All right. So on the 15-minute time frame, let me rewind a bit because I didn't realize I was on 15 minutes. Let's rewind. And I'm going to show you something. Now I've seen that. Now it's showing me my eyes. We've just taken this liquidity from down here. Look, the line that I've drawn. Look at it on a smaller time frame. Nam, 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 nam. We've just taken this liquidity. What I would actually like to see is, let's look at the time. This is our London session going all the way here. Look, this is coming into what? What session is this coming into, guys? Look at the time down at the below. What session is this coming into? Know your sessions.
New York. New York.
New York, that's right. So when it's coming to New York, I've already got my eyes on things. I'm thinking to myself, why? New York's coming. We've been kicking down here. I'm in a great trade that's pushed all the way down here, giving me 1.5%, plus my other 0.5%'s been running all the way down to here to about a 1 to 4. All right, maybe even more if you got a better entry. But New York's happening. Let's go through this slowly now. Oh, pushing down some more. I'm over the moon because New York hasn't kicked off yet. But let me tell you something. I'm concerned when New York comes in after grabbing the liquidity from below here and coming into potentially previous battlefield, this gray line. I'm concerned what might happen. All right, let's go forward. All right, first and foremost, I can see now, if I was to draw some lines in here, because I'm in profit now, I'm laughing my head off. I'm just watching this trade. I'm watching this trade and seeing the kind of price action, whether it's going to be the gift that this keeps on giving. But I'm in profits. I'm laughing. I'm completely risk-free. Now we've seen a push up in here as New York started at 1:30. We've seen a push in here. You know, have we seen our break of structure manipulation W in here? It's not that clean. All right, it is not that clean. So I'm not going to say yeah. But what I am going to say is this. If I was in this trade here, if I see indication, correction, continuation against me, I'm out. I'll take my money. Let's hit the button, see what happens. Immediately we get a huge spike here. I'd have been out from that spike. Yeah, my stop, if I would have been here, I am out. Yeah, is market pushing like this? I'll be out. Now, if we was waiting for an indication correction because you didn't see this spike, because remember, this spike isn't just a quick spike. Well, it is a quick spike in a minute. In the minute time frame, it's a quick spike, which could have been news. The only problem that we have with backtesting, guys, is that we've got no real indication of when there's key news happening. So for argument's sake, if we knew at 2, for all I know, this is some FOMC, for all I know. Yeah. So if that was the case and I was in those type of profits, I don't need to stay in this trade for FOMC. I could take my profits and wait to see what's happening. Yeah, this is full disclosure. You're backtesting, you don't know what news events are going to throw spanner in the works, especially if you're in quite small time frame. All right, so if there was a news event here, which you can probably go back and check what happened here, I'm definitely saying news, yeah, for this huge spike, okay? But even on this basis for indication, correction, and continuation, look where the candle's closed. Let's continue to hit the play button, see what happens. All right. This price action, yeah, like I said, I'd be out. Candles doing this, I'd be out. It's breaking previous structure, I'd be out. Either way, this is a completely risk-free trade. You took about 1.5% plus. If you closed out here, maybe another 1 or 0.5% out of the 2% trade. It's fantastic. Whatever news has happened here is none of your business. You're just like, okay, cool. But you know what I can see on a little time frame? I can see this market doing quite a big manipulation W pattern. Breaking structure, okay, on a larger time frame. If I move up the time frame, you'll be able to see it. Now, this is a question somebody asked me. It's like, what time frames are they looking for these patterns? Look, when the markets first take liquidity, you can get entry in a minute time frame based upon seeing very clean structure. If things start running past when markets initially open, why am I talking about markets initially open? Because that's when the volume gets injected in the market. We've seen over here, we was able to get involved in this trade here after this market did that pushed all the way down here. Let me tell you something, we could have got a better entry than this. We could have taken an aggressive entry above the last high. Yeah, turning that trade into a 1 to 10 trade. Yeah, at that point in time when the markets are teetering out, for a start, have a look over here. The reason why we're not getting involved in anything here and why we're so keen to get out of the trade is because you see this yellow box here. What does this lack of yellow box here mean to us? What does the lack of this yellow box here mean to us? If this is our kill zone window in London session, this yellow box, What does the lack of that yellow box mean to us as restricted traders? I'm going to tell you. It means that we don't need to be, getting involved in trades, or the fact that in here we have lower probability price action. Yeah? It's meaning that if I'm in good profits coming and this trade, for whatever reason, this trade took long and trickled down like that and got a 1 to 4 all the way down here, from the time we start seeing any suspicious price action, we can just take our money. Because we're in a time of low probability price action. When we get to higher probability price action again, it's going to be in here as it's trickling down, that's low probability price action. When New York starts, we're back into higher probability price action, which is here. So my bad. So in here, we was pushing down nicely, but we want to take our profits because we're getting to New York, which is going to, if we see price action moving against us in the wrong way, we want to get out of that business. All right. So let's have a look here. New York has started. Let's just slow this down and look at the price action of New York. Okay. So I'm going to show you something. Can you remember when we first got into that trade and I said over here that the market did not capture, which it could have done, Asian session highs? All right. That was the concern. The concern is that we're looking at this market here. Let me brighten it up a bit. And these Asian session highs didn't get taken before this market started breaking the structure. We know liquidity sits above here, but we traded indication, correction, continuation to our benefit, taking a 1 to 4 trade. New York started and said, yo, Londoners, what are you on? Do you think we're going to make this journey without coming and taking the money above the Asian session high? That's what New York said. Yeah, in my own way. Yeah, the mandem of New York. That's what they said. So as soon as New York kicked off, because of, I believe, news, yeah, this market did the most. See it? I believe news happened in this time that gave it a reason to violently push in the opposite direction. Okay? Because they said, you guys here had one job. This is what they're saying. Yeah, this is the conversation that's happening. Yo, Jason, Londoner, you had one job, is to go and get this money over here that we left for you. And instead of doing that, you and your dotish self, no disrespect to you, Jay, went and just pushed down here and trickled down here all slowly, all like with little silly little candles. What about the money we left here? New York came and fixed that. Said, listen, we're going to go and take that money. And the New York session, boom, we've seen an explosion out there, which I believe news could have compelled it and given it a good enough reason to do something very violent and push up into this direction over here and capture the liquidity above that previous Asian session. Now look, if I see in that Asian session liquidity is being taken here, I start all over again. Yeah, because look, I've given you guys the blueprint. All right, we've got the blueprint of our actual, how we can understand these trades, how we can get in and out of the market. Let me go and pull up that little file for you guys. All right, which you should all have, but I'm going to add 2 elements to it. I'm going to add the stuff about the news, which obviously I should have been in there. But I'm also going to add that what we're going to do first is you're going to trade indication, correction, continuation. Why is this? Because in my own testing, I have seen that if you trade that based upon managing your risk, all right, and understand it could be a sacrificial lamb, it will mean that you will never miss the actual move. All right, that you will never miss the actual move. So let's go and look at this same market here that we was looking at. Now that price pushed all the way back up in here and captured Asian session liquidity. Yeah, so I'm on a 1 minute time frame and I'm watching. And this is not one I made earlier. This is me going through these trades on a back testing tip. We went back a few days, all the way back to July the 24th, and I'm just playing price. All right. So here we're playing price, and we've seen this market. What I'm actually going to do right here real quick is I'm going to delete everything so it's clean. All right. I'm going to extend that Asian session high. So at least we've got that information here. And now we've got back to the charts at New York 230, and we're having a look and seeing what's going on. We missed this move possibly because I couldn't see a clean entry in here unless you just had luck of the Irish. Okay. And now we've come up here, we've swept or tapped into, let's not say swept as yet, previous Asian session high. So it's from the same day, but London didn't take this Asian session high. And we're watching as New York made a conscious effort, after shouting at the Londoners, and went and took those Asian session highs. Now what are we waiting for? We're waiting to see, do we see our manipulation W form, our M form in this area? Yeah. If so, does that manipulation M, does the leg out, push out with strength and speed and cause some sort of displacement? Let's have a look. Yeah. Does it push out with strength and speed and cause some sort of displacement? Well, look, we can see a manipulation W in here without even going to your line chart. It is like this, like this, like this, and now we're seeing a leg down. Okay, it is. It's not the cleanest on a 1 minute time frame. I can't lie to you. It's not the cleanest I'd like to see on this 1 minute time frame. All right, we can see it here. Look, let me show you something as well. You see me in a line chart. Someone saying, can we really see it there? Well, let me ask you a different question. Can you see a manipulation W anywhere else? Yeah. And more importantly, it's not about just seeing them anywhere. I mean, manipulation M, sorry. It's not about just seeing them. It's location. Me seeing them in the middle of absolute nonsense nowhere doesn't mean anything. You get what I'm saying? This isn't the cleanest. I'm not going to lie to you. I don't love it. I want to see a room, a real middle section of that M. I really would love to see them M's looking like this. Coming nicely down in here, then doing this, and then pushing down with some real displacement. Yeah, what I mean displacement, causing imbalances in here. So I'm not fully sold on this energy right now. I can't lie to you. I'm looking at previous structure, which is sitting, it's on this smaller time frame. It's kind of ugly, but we're sitting maybe around here, Yeah, we got it. It's not great. Yeah, it's a little bit fraffy. Let's see what happens. Oh, good job. I wasn't sold. Yeah, because here we go. We push back up. All right. So we've now captured liquidity. We're definitely above this little Asian session high. The question is, what are we going to do next? I'm watching it. I'm looking for that, what I look for. And at the moment, on a 1 minute time frame, I haven't seen it. Okay, so this is what I'm saying to you like this, yeah? Have a look. If you didn't want to miss this move today trading in New York, you could have traded, have a look. Indication, okay, correction. No, you couldn't, because this didn't break structure nicely. So it hasn't, this hasn't really indicated in the way you wanted it to go. So pushing up here, this is indicated above Asian session, corrected in this direction without breaking structure, and this could be seen as a continuation. And so I said, if you don't want to miss the move, you could have turned around and said, look, I'm going to do this as a sacrificial lamb. Yeah, on the basis that I've seen indication, correction, continue. What does that mean, sacrificial? It means that you're going to manage your risk. Yeah, but personally, and the only reason why I'm saying that is because we're looking at this market, and before when I had my lines in, which I'm probably gonna have to draw again, is it depends upon where you are in the market. Remember, the overall market structure and where you are is the fundamentals. It matters. Yeah, it matters. Yeah, because maybe we're thinking to ourselves, okay, we're down on this little disc on a larger time frame. Let's have a look at the larger time frame real quick. All right, I deleted these lines. That's why I'm having to draw them again. Let's draw some lines in regards to previous, structure. Do not sleep on drawing your lines. They are just lines, yes, I know, but don't sleep on just drawing your lines. Your lines, lines matter, okay? So we're at the top of this bigger Russian doll of this line, all right? Of this range, higher high, higher low, higher high. We're at the top. We're in that area. This would be the higher high. We're in that area of this bigger Russian doll. So I am a bit concerned. Yeah. So therefore, that initial, that push, that you see an indication correction continuation. In this instance, it's leaning more towards a trap, okay? And to be fair, we're on a 1 minute time frame, and I'd be ideally trying to line up these indication corrections and continuations with time. What do I mean by that? This is a 15-minute closure above here. So cool. In this instance, you know, you could have taken this trade as a sacrificial lamb. All right. I believe you may lose this trade, but let's see. So it breaking here, you've lost this trade. Fine. Because what we've now got is, somebody tell me. Somebody tell me what we've got.
A manipulation M.
Exactly. And in that manipulation M, you're very, very interested in the area where structure was broken in here and any imbalances that you see around that area. And I can see on the 1 minute time frame. And bearing in mind, guys, I could get egg on my face because I am not, this isn't one I made earlier for just to impress you guys. This is me just rewinding price. We've just taken a small L here, but in my opinion, taking that buy right at the top of a bigger Russian doll is something we wouldn't do because we're in a premium. All right, we're in a premium, so that, you know, really that wouldn't really have happened in real life. Yeah, so I'm interested in this area here. There's an imbalance in here, right where structure was broken, but there's also imbalance above, which I don't know if the market wants to be like, you know what, bro, we're going for all that imbalance, and the stops only here. A safest place for me to turn around and be interested in this trade would be doing something like this. Okay, now I don't know if we're going to get an entry. I don't know if we're going to get stopped out, but let's hit play and see. And look, let me tell you something for free. Whether we get an entry or we get stopped out, it doesn't matter. This is what people don't understand. It doesn't matter, because traders that are doing tremendously well and making money hand over fist might only tell you they got a 3 out of 10 win ratio or 5 out of 10 win ratio. This could be one of the 5 or 7 that lose. That doesn't mean anything. We know we're going to get punched in the face in the markets. Let's see what happens. I'm going to hit play, and then that's going to be the end of the session, guys. All right. See if we get an entry. See if it moves into profits. So from here, we can see that we are now come out of our key window of trading, and this area of interest that we wanted to take the trade in, we never got this market tapping into this area as yet. This market has not tapped into this area as yet. So in my opinion, this is called an unmitigated point of interest. So on this particular day, if you came on this New York AM session, you didn't get this entry. And you're like, look, I never took a trade. You know, market continue pushing down bearishly. Let's see what happens. All right, but we're going to leave this point of interest and see what happens. We're now tapping back, coming back down into these type of areas. Let's see what happens. So now we're in that area whereby we're not trading. We're outside of our New York session. We're in that little window, and this market has truly left us. But I'm going to leave this point of interest over here open, and we're going to zoom out and understand where we are in the range. Okay, where we are in the range is at the bottom of the range in this impulse anyway, back into a potential discount, because this market is still making higher highs, higher lows, higher highs, and at the moment, though we've come all the way down in here and this is level, you know, we're still kind of around here. Even if we wick below here and grabbing liquidity, you know, we're still only going to be making our first lower low. We haven't made a lower high as yet. So let's see what happens. Hopefully we're not getting too close to the date. Market's gone. We've made a lower low right now, and for me personally, this area up here that we identified would just remain, whether we identified it, would just remain as an unmitigated point of interest, because now we've come into this is the New York PM session, okay, and now we're looking at Asian session over here. So unfortunately, we didn't get an entry on that day. We haven't lost any money. We just didn't get our entry in based upon what we look for, and there's not a problem with that. Let's have a quick look now, because I'd love to see another thing, because you already saw the GU example. See another thing where we can take our trade and understand. Have a look at this. New York session is from here to here. We've just, in this New York session, we can understand that there is liquidity sitting below here, above here. We can also see that we're sitting in the middle of some significant imbalance down to the previous New York low over here. All right. Significant imbalance in here. All right. Now we've woken up in the morning and it's Asian session, this little red range here. All right. I'm going to play this forward on a smaller time frame and let's see whether, and put on 5 minutes, we'll be all week. And let's see whether we can take the ironclad way of making sure we don't miss out on the move. All right. It's Asian session. All right. Now this is Asian session kill zone kind of finished. And then we're getting into right about here was Frankfurt open. And this is now London open. Now we didn't sweep this liquidity up here. We're watching it, and that Asian session liquidity we pushed down here. And we're thinking to ourselves, why didn't we sweep over here? Okay, maybe this market wants to grab this little bit of liquidity below here and then start pushing up. But we are very concerned about this liquidity over here, which is previous New York session. Let's go to that, ironclad way of trading ICC first, indication correction continuation, or trading our breaker structure manipulation W. Okay, so we've seen an indication here below this liquidity level, indicating here, and we've also seen a little W that's been formed. It's not my manipulation W, so in my opinion at the moment we're just in corrective mode. Let's play this forward. Oof. So at the point when we saw this indication correction, this candle come down here, all right, that is our indication correction and continuation. And I don't like the way how fast this skipped down here, but that would be us turning around and saying that we're trading ICC first, indication correction continuation in this direction. I would have loved to see it just close here, give us a slightly better entry, but this really skipped down. Again, we don't know whether or not there was news going on, etc. But what I do know when I drew this out is that we identified that there was liquidity down here and we were sitting in the middle of significant imbalance. Let's see what happens. Because right now, if this market legged out of here with extreme strength and speed, we'd take the L and then we'd be looking for price to return back into this level here to push up higher and take the liquidity that it didn't take previously. But right now we're in profits over here. Though little profits, we are in profits. We're in more profits. We're in the imbalance. There's liquidity just below that red line. We're taking that liquidity. Okay. Let's have a look at what's going on. Taking more of that liquidity. Once again, this is not one I made earlier. This is how we're getting able to take the trade. Okay. Now we're seeing that there's still this huge imbalance here in this area. Going back here or zooming out. So now it's targets. Now we're in profits. Now it's all about targets. How are we getting our money? Where are we getting our money? Where's our points of interest? Well, this little area that I've put here is a point of interest because here we've seen strength and speed, but it's also a previous battleground. Yeah, this is also a previous battleground. So this is definitely, let me go again. This is definitely a point of interest. Now, is this market going to get all the way down there? I don't know, but it's looking good. It's looking like a potential area, and this market is actually, price has broken outside of the market, and it's now, it's acting peculiar from what it was doing, as in maybe it wants to change. Now we know at some point in time this market's got to retrace. We know that. So whenever we see liquidity being taken, we must be on our P's and Q's. All right, let's see what happens. I'm dropping down to my 1 minute time frame, excuse me. All right, let's see what happens. And I'm just going to play this one forward slowly and see how we do. Markets continue to be bearish, absolutely tremendous. Boom. At this point in time here, at 1 to 3, which was about here, we take off 50% of our position, making the mean we banked 1.5%. We make our trade completely risk-free, which means that we move our stops from where it was to here, and everything now is gravy. Now we're hoping, now we can pray to the gods, yeah, that this market doesn't come and stop us out for nothing with the second phase of our trade and continues to push down to take more liquidity, which at the moment we've seen it push 50% of this imbalance, and there's no, it might not continue pushing down, but who cares? We don't care. It's all gravy right now. All right, let's see what happens. See what happens. I could play it a bit faster, but I don't want it to just scoot past us. All right. Now, let me show you something here. When this market grabbed this liquidity in here, I am a little bit concerned of whether or not this is my break of structure manipulation W. I don't like the little kink in here. I like it to be a lot clearer. And if that is the case, that this is the breaker structure manipulation W, then this would be the point of interest, that it broke this structure. However, we are always curious about all of the imbalances that we see on that leg out. And all here, there is imbalances. Even here, there is imbalances. So we're concerned. In any manipulation W, our focus is on where it broke the structure, but we must see if there is imbalance in that leg out, you must take it all into consideration. So now I'm a bit concerned that we haven't broken out this level yet. I don't care, because I'm in profits and it's completely risk-free. I've taken 1.5% out. If I wanted to, I could just close my trade now. But I've seen the market kind of make it's not very clean. We've took liquidity first, which is our first marker that we wanted to see. Liquidity taken by this red line. And then we've seen a bit of a W here. It's ugly. It's not great. So I'm not 100% confident in it. I can't lie to you. All right. But if that is the case, from here, where we broke, all the way down to anywhere where I can see imbalance is an area of interest. It's an entry point. Yeah. So from here, that middle area where it broke structure, all the way down to if I can see any imbalance in the candles, which are in this instance coming all the way down here, is a potential entry point. If I was taking this trade, obviously I wouldn't put it there. I might as well just put it below this low. All right. So we might see now this market deciding to turn around after taking this liquidity. When would I confirm that? Was when the indication above this structure, yeah, or better still, is after this market's tapped into that level to see whether or not it's going to indicate correct and continue back above this level here. All right, let's see. I'm playing it forwards. Let me zoom out a little bit. Remember, we're completely risk-free. We took 1.5%. We're still in the London kill zone. Okay. And let me play it forwards because it's taking too long. Let me speed it up a bit. Hopefully not too quick. Its price action is really jittery. But right now, it coming all the way down here, past where the imbalance was, breaking this structure, I think we're going to break this level. I'm just letting you know. If I was in this trade right now, watching it, thinking to myself, oh, please give me more, give me more, give me more. Yeah. I'd be thinking to myself that we're going to get past this level right now. Let's see. And in my opinion right now, price is... Somebody tell me what price is doing. Somebody knows what price is doing.
Consolidating.
Yeah, price is going sideways, yo. Price is in this sideways action, and to be perfectly honest, who knows what's going to happen next? Price is now consolidating. It's having a conversation. It's pulled up a chair and it's having a conversation. Do we go down more? Do we go up more? Do I want to be in that conversation if I've already taken profits from up here? Not really. Yeah. So right now, I'm kind of thinking to myself that this conversation may fail. Why might it fail? Because as this consolidates, it builds up liquidity on each side of the consolidation, which means that even if it wants to go down, it might go up first and stop me out before going down. Even if it wants to go down or up, it might go down first before doing that. So I'm thinking we must stop being here, even though I took out some nice profits before, 50%. You know, I'm now watching my trade going all the way back down to $100, and I'm thinking to myself, I might just get stopped up. Okay, let's see. See, it's consolidated in that yellow orange box. Yeah, we're just watching it. We're no longer in our area whereby we want to take any trades, but we're watching a trade that we took within our key zone. What we might see is this market just do nonsense until New York kicks off again. Let me make it 5 minutes so we're not sitting there all week. And let's have a look to see what happens. I'm going to slow it down because I'm going to move very quickly on 5 minutes. Let's go. Back in a little bit of profits now. Lovely. So that trade that we had sitting in here is still going great, completely risk-free. And where is it pushing on to? I'm looking at this now as a point of interest, which is liquidity and some imbalance. So I'm looking at, all right, and I'm over the moon because that trade is doing what it needs to do. And currently now I've got another one to, actually I didn't know what my risk was. Let me see what it was before. It was about here. I can't see well because I've moved the bloody I moved the stop loss one. Let me put it back in again to see what our risk to rewards. let's put it down to here. 1 to 8, nearly to a 1 to 10. So that means the first 1.5% we've taken, and now if it gets to a 1 to 10, that means we can take the rest of it, which would ultimately be another 3.5%, making it a 5% trade. What do I mean by that? I said it was a 1 to 10, but we already took off. When it got to 1 to 3, we took off half of the position. So if it then runs for the other 7, yeah, making it a 1 to 10, that means 7 times 0.5% is 3.5%. 3.5% plus 1.5% is a 5% trade. All right, let's see what happens. What did it go to and have a reaction to? Grabbing our liquidity and giving us our 1 to 10. We are out of this trade. That's it. We're out of this trade. We've got no reason to sit around this trade forever and ever and ever and amen. All right. And we can do that every single time. I showed you on the GU this morning how we would have caught, or how you would have caught that huge trade of the market running now. Probably looks like a 1 to 20 trade. All right, to be perfectly honest. All right, and how did we do that? How did we achieve that? Let's show you. Let's quickly say how they achieved that, even though we're completely run over time. But thank you for still being here. All right, is that if we put on that indicator that for whatever reason has disappeared, okay, and the indicator, I just use it for sessions. I don't use it for ICT strategies or whatever it may be. I just use it for the sessions because it's one of the better ones that I've seen for sessions. All right, it's called ICT kill zones, and hopefully it's going to have all my settings and it's not going to have some random settings. Cool. So have a look here. Based upon the strategy that I said to you, that we understand that the market lacks liquidity. But if we understand this market is bearish, which it is, and we see at the open of New York session, of London or New York session, that the market gives us our indication grabbing liquidity. At this point in time, if it's grabbing liquidity to go and push up here, then I need to see it make that manipulation W and that leg out happening. So I take the trade upon indication, correction, and continuation below that level. I execute that trade. On a 5-minute time frame, you would have got a lovely entry. Aggressively would have been above the last low, last high, sorry. You know, a safer place would be above a swing high, but I wouldn't bother going all the way up here because if the market starts going up here, it's going to stop you out because it's going for liquidity. So this would be my only place I could place my stop loss with my spread times 2. Yeah, over here. Let's just say for argument's sake for 5 pips. If this market aggressively legged out like that and stop me out, cool. I take it L. I take it L and then I wait for the price to return back to that displacement for a buy. Where to take the liquidity above the Asian sessions or the previous London session. And that would have been my trade. Yeah, and I would have got a lovely entry on here on a smaller time frame as it pushed in here. And this trade today, if we was able to get involved in this trade, taking our indication, correction, continuation below liquidity levels, understanding that the market is driving to where it needs to go to, where would our targets have been? Well, we'd have been definitely looking at liquidity levels. That's New York PM session liquidity level. We'd have been looking back below here. All right. I can't see what time that is. That is London session liquidity low over here. Okay. We'd have been watching these here, and this market has just absolutely melted through all of those sessions. Yeah. All of that liquidity's been taken. It's got enough fuel to pop a UE and kick back and do something. I'm just letting you know. It's got enough fuel, and we're driving towards this liquidity level to pop a UE and drive and push all the way back up in here. What might make it do that? Yeah, some of these red folders. Yeah, Bank of England interest rate decision. Yeah, Bank of England monetary policy report. Yeah, USD, jobless claims. PMI, these could make it do that. These could make it say, we've collected enough fuel to run back in here and capture some of the liquidity that we left on the table, i.e. above these Asian highs, above these, areas here, even above here. Don't get it twisted. It's not impossible. Might not happen today. Might start, New York session might start making its way, pushing back up in here, and maybe by tomorrow, whatever it might be, all the way back up in here again. It's not impossible. All right, it is not impossible, guys. Have an amazing day. I hope you guys are going to be able to combine. I'm going to add it to here because I want to make this bulletproof. This bulletproof way means that there's very possibly that you have a sacrificial lamb, because if that legs out against you, cool, you take the L. What does that mean? That means you must manage your risk on that trade, on all your trades anyway. But you must make sure you're not like, oh yeah, I'm going to go in here full, balls to the wall. You got to say, okay, I'm going to manage my risk here. And if you see it running in your direction, of course, you can always scale in. But the reality is this is going to mean that you wouldn't have missed this trade. Because in this instant this morning, the market didn't grab liquidity and go in the opposite direction. The market didn't care about Asian session low liquidity. The market's doing something else. But yet our other understanding of the markets with price action ICC would have allowed us to get into it. So what are we doing? We do both. We do both. Yeah? Meaning that little small loss that you take, because it will be a small loss, will be drowned out by the bigger move. We do both. Okay, guys, have an absolutely amazing day. What I'm going to do is I'm going to put something on for us to be able to watch and learn. Doesn't matter what it is I put on. I think we've done enough trading stuff. I think what we're going to do, we're going to watch a podcast with a guy. He says that if you've got $1,000, the best way to 10x that $1,000 is in our. I should tell you, like, it's not come out yet. It's just a notification to notify for that. We're gonna put on something that we're gonna learn something. I'm looking. What is there anything there that we can watch of interest? Of interest. All right, so we can put on a podcast of somebody talking about their trading journey. In fact, no. First and foremost, we're gonna watch Ron from the Coin Bureau. Produces really good content. Guys, for those of you at home, like, subscribe, tell people I'm sharing the source. All right.